Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We're going to talk about, it feels like every weekend we have like 3 or 4 headlines on Tesla. So we're going to break down those headlines, what it means for the stock this morning. Have a couple earnings on our radar, another food recall, this one with Mondelez, and some volatility in the hospital stocks thanks to a buyout of LPNT. And we're going to talk about ETFs also, and whether they provide systemic risk in the market and or drive up valuations of stocks, because that was kind of the theme of the pre-market show. So I have a nice little chat about that. Joel, why don't you run through the S&Ps for us? But you're on mute though, so it's okay. Monday morning.
You.
And I even said, like, good morning to you, Spencer. Good to see you. Hope you had a nice weekend. Good morning, Dennis.
I didn't hear any of that.
Good morning, pre-market prep
I didn't hear any of that.
Around the world. Good morning. Spoos are in the green by a half a point. We had a
How old are you now, Joel?
Yeah. I'm sorry?
Let's throw it out there with the mute. Joel's getting a little senile.
Let's see. I'm not 60 yet.
Keep going. We won't even ask how old you are.
Okay. All right. Spoos up a half a point. Nice range. We couldn't quite get to the lows from last week. That was 27.89.75. That's a target on the downside. On the upside here, 06 is your high. 1050 was your high from Friday. Keep an eye on that as a target. Crude gets a little boost from a Trump tweet versus Iran, up 71 cents to 68.97. Gold steady here at 1231.40. That's up 30 cents. Silver going the opposite way. That's down about a penny at 15.54. And don't look now. Bitcoin is approaching 8,000. This is in the futures. Bitcoin is up $370 and 7,715. I'm talking the futures here, Dennis. And you know what I would call this rally in Bitcoin here?
What?
I call it a healthy rally.
Yeah. It's formed that nice support. I like technicals. If I was a crypto trader, I'd be on that side. That'd be the side I'd be on. Although it's been a pretty good run now. Kind of, what do you think now that we're getting extended? I mean, you had the nice support down 6,000. Now you're at like 7,600, 7,800. I mean, you kind of chasing it a bit there, no?
Yeah, I mean, there's just, you move your stop off if you're trying to stay long. And because the last 4 or 5 sessions, it was finding support in the lower $7,000 handle. So, it's slowly moving up here. I mean, you got to think about, 10K here, as a possible target. Just, not going to whoosh right up there. But that would kind of, turn people's heads if all of a sudden it went back to 10K. But just consolidating here, just a slow, steady rise. And just wanted to bring it up to our listeners that breakout over 6,800, still holding $1,000 above it.
I just want to add, I want to add before we continue that I just for listeners or people watching the show, that I updated our Skype on Friday. So I'm going to switch over to that now. Joel and Dennis are a little bit bigger. Their faces are a little bit more zoomed in, but don't freak out. That's normal. But I just wanted to say that. And then now we can continue.
All right. I want to see what my face looks like on this thing. Is it too big?
You're a little,
get my makeup
you're a little zoomed in.
I always have it. Oh, holy cow, we're too zoomed in. How do we fix that?
I'll work on it today. I didn't realize that would happen.
All we see is It's not Benzinga anymore. It's just ga.
And you still got the bright trading in
I can still see bright trading. You can't see the stocktrading.com, so I don't know if Rob would be happy about that.
We're working through it.
They're working on it. We're really zoomed in. You can really see. I better start combing my hair more in the morning because at least I have hair still, I guess.
Real quick, BZ Tokyo sold out of his NXPI position and bought a few calls as a lottery. Who knows what's going on with that thing? But What's up with FCAU? And that stock had a tremendous run. I don't know. These autos are tough. I mean, with everything that's going on, the stock is really coming off its highs. Looks like it's showing a little bit of life here. Did we have any news on FCAU today?
Yeah, we had news over the weekend. The CEO, Sergio Marchioni, is stepping down due to health concerns. Ooh. So they're
eating Ritz crackers.
They're employing a consortium of people to replace him in various departments. The Fiat Chrysler, the Ferrari, but he's stepping down. So that, and he was the man there. He was the man. So him stepping down kind of is a downer this morning.
Yeah. So that's why I see Chrysler trading down significantly. The pre-market down 2.5%. Remember, this is trading actively over in Europe. So the price discovery phase happened 4 hours ago. We're just following what is happening over in Europe. Significantly down here. I mean, if you are looking for the test, the big level is 1830. I don't know what we did pre-market, but that was the level that it obviously needs to hold there because that was the low from June. And really, when you go out, that's basically the low of 2018.
1857 marks your pre-market low. You're back here up in the upper 18 handle. So, keep an eye on that. Don't get too faked out if we go through the low. Multiple closes. If we do go into rally mode here, this thing has just been mirrored in 1, 2, 3, 4, 5, 6, 7, 8 closes at the 1950 level. So I don't think you're out of the dark at all until you clear the multiple close area at 1950.
Let's go to the other car company that is all over my Twitter account here this morning and all over the media from the weekend. Obviously, that is Tesla. Spencer, just start dropping the headlines because there was so many I couldn't even count them, and they were all major.
Well, all right. I don't know.
Just drop the big one.
So I guess the big one, the two big ones that I saw over the weekend are that they have had to approach their suppliers and ask for some cash back from their suppliers. As a sort of cash infusion. That's not a good sign. The other headline I saw is that 24%, this is an estimate from Analyst, so not a confirmed number, but this analyst says 24% of Model 3 orders have been canceled. Neither of those are good.
Okay, so none of that's good. And then the Wall Street Journal is supplier thing. What's the details on this thing? So Wall Street Journal article, and now they're asking the suppliers for more money.
They're asking their suppliers
so they can become profitable.
Well, to support the continuation of the business, essentially, is what the note, the letter that they sent to their suppliers that Musk sent them said look at it as an investment in the continued operations of Tesla.
So if they don't do this, Tesla's not going to continue operations? Is that what they're trying to imply?
Unclear.
And then you got the New York Post article, Spencer. Can you get that one up there? And headline, I believe, was what? Do you have the headline in front of you? I don't want to butcher it.
Let's pull the exact. Yeah, Elon Musk is a total fraud. That headline.
That's the headline of the article. The New York Post. I mean, New York Post.
That's a
well-read publication. Elon Musk is a total fraud. That's the title of the article. Wowzers. I mean, there was a lot of bad press for Tesla here over the weekend. This Wall Street Journal stuff is concerning. The New York Post article, I read it, and they, a lot of this is factual in there, but a lot of cherry-picked stuff in there. And I'm not a fan of Tesla, you know that from an investment standpoint, but I do respect Elon Musk and, a lot of these stuff that they pulled in there. They basically said everything bad about that you could possibly find. Like, if you read it and you've been following the PreMarket Prep show, you probably know all of these stories. They just cherry-picked every little negative fact they could find over the last couple of years and put it all in one article. So I don't know if it's called a fraud or, he's obviously, does a lot of things that maybe, and especially when his Twitter account that are questionable. I think that article pushes the limits, though, and I don't know if I'm on board with, what they're saying, a lot of stuff in there. But, I mean, you can't argue with the press this weekend. Terrible press for Tesla. The Wall Street Journal article is the one that's really driving us down here. If they're asking suppliers for money back to get profitable, it sounds like desperation to me. And that's why I think, you see the stock trade down 11 points. Now, all that being said, Tesla is still trading above the 296 level. And that is the level that it absolutely needs to hold from a technical basis. It looks broken on the charts. It looks like it's going to take it out. Maybe it does. Bad press here, but we know we've seen lots of bad press for Tesla before. It seems like every time it's down $10, you look at it in the afternoon and it gets it back. So I don't know if I'm coming in here on a normal stock, I would say sell the hell out of it on all this stuff. But this is Tesla, and it's loved by the market for whatever reason. It's loved by ETFs, which we're going to get to in a second. Everybody who launches a new ETF, growth ETF, throws Tesla in there. So that continues to help the stock out as well. And that's highly shorted. So, I mean, there's a lot of reasons why the stock could probably bounce back again. But I'm not coming here and buying it because this is some terrible headlines.
Yeah, you mentioned that low at 296.12. Also, you got to, and I can't get this fact out of my head. When we had Gene on, that was probably like 2 weeks ago. I mean, he was like 100% convinced that they're going to be raising more money in 19 or, sometime. Yeah. So, I mean, how excited can you get, about a stock that it's going to have, a potential, dilutive, event coming up. So, I mean, he talks about a lot of the fundamental things. I'm looking at this chart here, and I remember looking at it on Friday, and I wish I could give you a better number, but it's a $300 stock. But if you're thinking of owning this thing, instead of trying to buy it here at 302, 303 or whatever, 305, the 3.25 level is just huge. I mean, looking on the daily charts.
Wait till it starts to go back up.
Yeah. I mean, for me, until that thing goes through 3.25, and I mean, I see a double top on Thursday and Friday at 23.50, 25.5 high, 24.74 high. I mean, to me, that's just someone with a lot of stock, either, trying to get out that level or get short. So I'm waiting on that. And then Dennis gave a good number on the downside. That 296.22 pre-market low stands at 299.55.
I mean, it's still in a range until it's broken. And you're actually, if you're coming here selling it short this morning, you're selling the bottom of the range, which is a technical thing, can be a scary thing to do because it could just bounce right back. I think the headlines are terrible. I'm hands off here now. I played it long, on the shakeout through 300. I thought it might get the pop. It did. I didn't get out quick enough, but I still made a little bit of money. I agree with Joel. I mean, he's making a great point. I mean, let's wait till we get some positive stuff happening here. Let the stock get up through 325, and then it's working in your favor. I mean, then you're in a, back in a breakout. You got some air above there. Until then, you have overhead supply all over the place, so it's hard to really be a buyer and say it's got to bounce right back. It might, but it's a lot of it. It could go. It's more of a coin flip here, really, in my opinion. Do you have the fundamental sellers that are just done with the story after all these negative headlines we've had that are going to overpower the buy the dippers that are probably going to be coming back in? And then there's the wild card that we were talking about on the pre-market show. Maybe it's a good time to go on this tangent. Is every time somebody launches a new ETF, a growth ETF. What stocks do they put in there? They want the stocks with the top line growth. Tesla has top line growth, so it's one of them. Netflix is another one that goes in there, and then you've got all the other big guns too, like the Facebooks and the Apples and the Googles and the Amazons. It's what they want. So this market is, in certain stocks, is artificially inflated just because you've got new ETFs coming out all the time. They're all growth ETFs, and they're all putting the same stocks in there. So if you got 200 million worth of new money coming in ETF, and they want to buy Teslas, there's going to be a few million that are going towards Tesla. If that happens a few times a week, it continues to help the price out. So it's hard to bet against it with so many new ETFs getting launched all the time. And they're all growth ETFs. And jokingly, how many, just, a question in the chat and a question we were asking, in the pre-market, how many of these new ETFs are putting a stock like GE in there? How many are saying, oh, we're launching the new ETF that's going to invest in General Electric? Well, I don't think too many people are excited to invest in General Electric. But when you come in here, you're launching a new ETF that's investing in growth companies like Netflix and Tesla and Facebook and Twitter and, all the stocks that have the buzz right now. That's what people are pumped up to invest in. So if you're looking to raise money, those are the stocks you want to put in there that's saying you're going to buy because that's where people want to be. And the buzz is still there. So until the buzz ends here with Tesla, and maybe it will eventually, these stocks continue to remain artificially inflated and valuation really doesn't matter at this point.
And, what about the whole rant? Well, it's not a car company. It's a battery company.
Well, it's excuses by other investors. It's just
when I was on vacation, I can't remember where the person was from. We were talking about cars or something, and maybe they were from the the northern Michigan area. And I'm like, wow, not a lot of Teslas up here. And he's like, there's no charging stations. I mean, in order for this to be a viable mode of transportation, you're gonna, you can't have a extension cord that goes 500 miles. So in order for this
They're
to really
getting it slowly. They are working on that. The infrastructure is huge. You're right. It's hard.
Yeah, expensive too.
Oh, a lot. That's why they're burning so much money. What is it? That article in New York Post saying they're burning or one of the articles that I read, there was so many articles this weekend on Tesla, that Tesla burns 500,000 an hour. That's what they're burning up is the cash burn rate. So they need to do a new raise. They know they need to do a new raise. That's why they're reaching. Elon Musk doesn't want to do a new raise because you know why? Because everybody has said they need to do a new raise, and he's always the one that, hey, I could do this a different way. So now he's getting desperate, and he's asking suppliers to give rebates back on money, that they've already committed, that they're going to spend to them. So he wants to pay his suppliers less so they can try to be profitable in other ways and not do a capital raise. They all know he needs capital. He's burning it so fast. There's a couple convertible notes that are coming up due, one in November or something, one in March. Got to pay those out there too, or obviously, have the stock price out above where they'll convert over in equity. So he's got a couple of trades to do a capital raise, but he's probably going to have to dilute the stock again. So if you've got a dilution event that's going to come, it's not going to be good for news for it either. But does any of that matter if you continue to have ETFs getting launched that want to market this stuff and buy these companies? I don't know. You have like this artificial bubble created in so many, not so many, but in selective growth names that they go up no matter what, because that is how people are, that's what they're buying. So it is. It's different, way different than 1999. 1999, everything was in a bubble. You had Walmart with a PE of 60. It was just silly. This is selective. There's just certain companies that valuations are absolutely ridiculous. And, you can't even look at them. If you're a value investor, you just got to say, I'm out. I mean, and Tesla is one of them. Valuation is ridiculous here. I mean, even if you think it's more than a car company, maybe you get some arguments the other way. But I mean, its market cap is more than GM and Ford. I mean, these companies have been around forever. Maybe they're going to do it in a better way. Maybe they're going to have better margins. Maybe I'm going to be wrong. But I think, in the long term here, valuation still wins. That's why I'm out on these companies. But I think a lot of to do with is that every ETF is buying these things. Every growth ETF has got these names in there, and they launch a dozen of these things a week. And there's more ETFs than there is stocks, I think, now. So if that continues to happen, it continues to prop them up. So even though valuation's crazy, real hard to short these names.
And we'll keep pounding the table until it comes in, right, Dennis? I mean,
I'm not pounding anything because I'm not short the name. I'm not short the name for the reason I just cited. I'm not going to invest in. I'm going to trade it. I trade Tesla all the time, and I'll trade on headlines. I'll trade it for bounces, but I can't invest in it because I'm a value guy. I went through 1999. I went through 2007, and I know, you do cycles. And in the long run, if you're in value names and you go in these down cycles, which eventually do come, your portfolio is going to hold up better. So that's why, I don't buy stocks that don't make money. And for my investment portfolio, for trades, swing trades, you can do whatever you want. I mean, you can always just have it out. But when you look here and you look at the reasoning behind this, there's a lot of reasons why these stocks could continue higher. So that's why I can't short them either. And the main reason is that you've got too many ETFs that are buying the same damn companies.
Yeah, I mean, I was doing some 401k stuff over the weekend, and you are presented with this portfolio of funds that you get to choose from, right? And you get to pick your allocation to each fund, et cetera, et cetera. And just looking at the performance, that's one thing, but when you look at a fund's top holdings and you see names that right? You see Netflix, you see Facebook, you see Google, you see Bank of America, you see Berkshire Hathaway. That makes you feel good, even though that small caps tend to outperform in the long run. There is a part of you that just makes you feel better, knowing that you're invested in names that you've actually heard of, right? As opposed to some small cap Russell company that you've never heard of before, and I think everyone there, that's like a basic psychological thing that applies to everybody, right? There is a sense that it makes you feel good. It makes you feel safer at night,
It's a great point. I mean, that's the marketing behind it. But not only that, it's performance drives performance. So another point you're making, you look and you compare all the returns. Well, you see this value fund with GE and all these other holdings that is doing absolutely crap? Do I want to take my new money and invest in the fund that was, down 5% last year? Or do I want to invest in the fund that was up 40?
Sure.
I want to go where the money is. I want to invest in the fund that's up 40. So then the money comes right back into these stocks there again. So it's like the oil argument, lower oil prices, then the suppliers come up. But as it continues to go up, as stocks continue to go up, they can continue to go up and the bubbles get bigger, because that's where the money wants to go. It chases. The analysts do it too. We talk about the analysts all the time chasing price. Well, investors are the ones that chase price the most, and they're going to go to the outperformers because they believe that's going to continue, and it does. I mean, it has until it doesn't. So I'm just giving the argument. You can argue all you want from a fundamental perspective. This is a bullish argument for stocks like Tesla because they're propped up because these ETF flows keep coming in. Until the ETF flows slow down or go negative, I can't see a reason why these stocks are going to collapse.
If you're an ETF provider, first of all, it's not launching an ETF isn't the most difficult thing to do. There's like you said, a lot of new ones are launched every single week, and if you're a provider, the one thing that you need to keep the fund alive is assets under management. You need AUM, right? That's how you keep the fund alive. That's how the fund stays alive and you keep your job. How do you get that that AUM by promoting stocks like GE? Absolutely not. You get it by promoting stocks like I wouldn't even say like Netflix. I mean Netflix too, but you get like the hyper growth ones, like your blockchain and a few years ago, your 3D printing. The really hot, sexy industries, the super growth industries. That's what you get, and you fold Facebook as. If you say it's a blockchain play, it's a blockchain play, sure, because you said it, it's in the fund, whatever. But that's what you need to do to keep the fund alive. So to get the assets into the fund, you have to market, the hot names. And what are the hot names? And
GE is not sexy.
It's a snowball effect, and it builds and it builds and it builds. And I saw a stat that like of the $4.5 trillion ETF market, like 78% or 80% of that of the ETF market is equity ETFs. So you have your bond, your commodity, etc., your alternative, but equity ETFs are the vast majority everyone knows that the vast majority of the ETF market, and they're just going to drive up. The more ETFs, there's no limit to the number of ETFs that can exist, right? So the more that get launched, the more that
they're buying the same stocks,
right? They're making different takes on the same things, a couple of differences here and there, but by and large, a tech ETF is a tech ETF, and some are more, niche than others and more specific and targeted to specific areas of the market, but tech is tech by and large. And so the one thing I would point out, though, is I happened to have read this article 2 weeks ago from the Journal. According to S&P Global Intelligence, they were asking this very same question: Do ETFs can they cause widespread market disruptions? And their report concluded that while money sloshing into and out of passive strategies does move asset prices, S&P researchers concluded that fears of widespread market disruptions because of ETFs are overblown. So, yes, ETFs,
it would depend
ETFs
on
move price.
All ETFs owning the same stuff. And I'm giving the argument that I bet you a lot of those ones are. So you can cause market disruptions as all of a sudden you get everybody saying, I want out. Now all these ETFs got to sell. We haven't seen that in the last 10 years. So there's been no real fear. I mean, yeah, we've had blips of, Dow down 500 in a day or something, but you bring up that S&P chart for the last decade, it's up. I mean, it's just flat out, been going in a bull market. I mean, since 2011, that trend is so smooth. 12, 13, 14, 15, we hardly even had a dip. Then we got, 16, early 2016, we had a few problems with oil going down to $27 a barrel. And yes, we dipped down the S&P's maybe 15% or something. But really, in the U.S. markets, we haven't had any significant pullback here in the last 8 or 9 years. So people don't know, what can happen. And any new investor that started after 2010 has been rewarded so much by just chasing growth. So there's no reason to stop that. And there's going to be no reason to stop that until there's a crash. There's like a crash in all the growth names, like a serious crash, not like down like 5% a day, like down like 50%. And the problem, and that's difficult for the market to happen because they got circuit breakers and everything's in there now too to try to stop that from happening. So, I mean, it's a tough sell, and people are getting and they're getting upset with me a little bit in the chat. A few people, because it kind of sounds like a bearish rant on Tesla that doesn't deserve the valuation that it is. And, from a valuation perspective, I believe it doesn't. But I'm not sitting here selling shorts of stock, and I'm not this isn't a bearish argument. I'm telling you the reason that I believe the stock continues to go up and the stocks like Netflix continue to go up is that there's this ETF flow coming in and they're buying all the same damn names. So it just continues to prop it up. And if you think that's going to continue, you might as well be long these names.
This is
now,
all.
I'm not, because I know eventually something is going to happen that's going to chase everybody out. But I'm more comfortable owning the value names because I've been an investor for 25 years and I've went through some pain. But if you're new to it, you never been the pain before. Just be aware that can happen.
This is all Peter Lynch's fault because he said to invest in what you know, and everyone knows Facebook and everyone knows Tesla or Netflix and Google.
Well, they do, yeah. Now the newer investor does.
This is all his fault.
You're right. They do. They know that they're comfortable investing in those things. I have a Netflix. They got a Netflix. I have a Netflix.
Yeah.
So you're like, I'm giving Netflix $10 a month. Why the hell would I not be invested in the name? They don't even look any further than that. A lot of your investors, period. Not just retail, just invest.
I said that,
not sitting there crunching
partly
numbers.
In jest, but you get it.
But
when you stop,
but when you stop and think about it, it's a nice tangent. We're sorry, we're not covering a lot of stocks, but every once in a while we got to go into a tangent and talk, some rational thought here. You look at a stock like Netflix, and you look at it being, I don't know if it's still the case after the fall, if it's worth more than Disney, but it was, 2 weeks ago. It seems absolutely to me, as a chartered financial analyst and CFA charter holder, it seems absurd to me. It seems absolutely absurd that Netflix can be worth more than Disney. It seems absolutely asinine. It sounds crazy. But I've talked about this before, but why is it going to continue? Because if all these ETF names are sexy, and everybody, for the argument you just gave, Spencer, is like, I have $10 Netflix account, I'm giving money into Netflix. Why would I not own the stock? They don't know about valuation, or they don't even care about valuation. They just care, hey, I'm comfortable owning that name because I know I'm giving it $10. I know my neighbor's giving $10 a month. I know. Great business model. Netflix has had a fabulous run. Great business model. Nothing against the company of Netflix. All on valuation, though, it doesn't make any sense to me. It's online Blockbuster. It's like literally you just go there, you rent your movie, but it's right there in front of you. It's really what it is. It's a fee-based Blockbuster. Blockbuster went out of business.
You say that they said there's something wrong with that. There's nothing wrong with that.
There's nothing wrong with that. But I'm saying is that, you look at Disney and they've got like 12 of the top 13 movies of the year. The productions, you can say Netflix is producing, the best content. Nobody's beating Disney on content overall. Really, Spencer? Is Netflix coming out with these blockbuster movies, that are hitting, $200 million over the course of the weekend?
No one knows because they won't tell us.
Do they have the parks? The parks are incredible. You go to those Disney parks, you can't even move in those things. They're so busy. It's, and then they've got, they're going to be doing their own streaming service too. Netflix has a streaming service. There's going to be competition coming into that space. There's going to be something else. I just think from a valuation perspective, it's crazy that it's worth more than Disney. But is that going to continue? Probably, because there's ETF flow. It's going to buy these names.
All right, I know Joel is itching to move on, so let's.
No, I'm fine. These kind of
background, Joel. What is your thoughts here? Give us your thoughts here, quick, and then we'll move on. What is your thoughts here on valuation? Be damned.
Dennis, we've been having the same investment philosophy for over 20 years. We don't buy. I don't buy stocks like that, so I've missed up on some substantial upside in these kind of stocks. But I'm content with that. And the stuff that I've owned for my long-term portfolio and grind it out, 3, 4, 7, 8, 10%, in the real bad years, I was still able to scratch out a little gains. So, I've never been in them. I've been in them for short-term trades or option trades or something, but, I haven't. I guess the only one, maybe I've kind of like ventured out of my wheelhouse a little bit was Twitter. And but besides that,
that was one of your best ones. Maybe we should both venture out of our wheelhouse more often.
Joel, I remember like 2 years ago when you were like at the height of your Twitter madness, and you were so upset with the damn stock like every day, and you were in a bad mood all the time because it was always going down. And I think I asked you, Joel, why do you do this to yourself? And you said because it's fun. Do you remember that? You said, I was like, Joel, just if it makes you miserable, then get out of it. And you said, but it's fun.
It's fun trying to predict things.
That's what you said.
That was actually the point where I stopped trying to play it from a short-term basis and just threw it into a couple portfolios at 17 and said, to hell with it. I'm not even going to worry about it anymore. So sometimes that's the best thing to do. But boy, 8:31. Do you guys want to cover any earnings or mergers?
There's not a lot to cover, so it was a good day to go on a tangent.
Well, we got news.
Quickly do the earnings.
We got news. Earnings, should I start from Halliburton? You want to go there?
Yeah, do it.
All right, Halliburton Q2 EPS of 58 cents, which is in line with the estimate. Sales $6.147 billion versus a $6.11 billion estimate. So it beat on the sales and an in-line EPS for HAL.
Stocks in the doghouse, not good. 44 support, though. This has been a huge level for this stock back July. So that's the level where it obviously needs to hold. It pulls control of it. I don't know where it got down to pre-market, but I almost can just guess that it probably bounced off 44 if it got down there.
It did. Well, not quite. It's trading at the lows of the session.
Right now. Hasn't got there yet.
Yeah. When I look at these stocks, I look at Halliburton and I look at Schlumberger and stuff, and I'm just like, and oil's, doubled in price. And
they have not participated.
Yeah, they have not participated. So if they haven't participated now, I just can't get excited about them because it's just they've had the catalyst with the oil and they haven't gone up. So if you want oil,
it's weird, eh? Like you think about like Schlumberger, Halliburton, they haven't participated. And with oil up, there's always, oil's straight up since 1 year ago. Oil's went USO, if you just look at it, they're 9 to 14. Halliburton has went from 40 to 44 and, come off significantly from those highs. It's amazing that they haven't participated. So I guess you got one of two theories. One, it's a laggard and it's going to play catch up, or it's a laggard for a reason. Maybe you don't want to have it.
I'd go for the laggard for the reason. Let's see, you had a low in July, 43.94. Dennis talked about that. Major resistance at 45.50. I see a couple highs if you can get back up to that level.
All right. And then he also had the big one this morning with the big gainer. The toy company is back.
Hasbro with the Q2 EPS of 48 cents versus a 31 cent estimate. Sales $904 million versus $840 million. So huge beats on the EPS and sales for Hasbro.
Stock up $10 in the pre-market. Toy maker still, though. Let's put it in perspective. I mean, do you really want to be buying, a company? Like I've said before, and, my buddy at Bright and talks about this all the time, his kids too. The kids like playing, like I've got a 1-year-old and a 3-year-old. My 3-year-old, and we try to limit his screen time, but I'll tell you, over, whatever, figurine Hasbro toy he's got there, he would take that iPad 100 times every day. He would have it nonstop if he could over the other toys. The kids like the little electronics now. And you try to limit it, 90% of the time we're playing with toys. But it's forced.
Time out. You just went on a rant about how everyone is invested in these same tech companies. And now you're saying, who wants a toy company? I'd rather be in Apple with my iPad or my Netflix.
Well, you got to have some fundamental. I'm talking from fundamentals here, too.
Oh,
I don't, unless Hasbro is going to be coming out with online toys or something, like toys that you can play on your iPad with, I can't see the physical toys a decade from now, having the kind of, it's just moving away from it. It's moving away from it. And, it's a matter of, are you going to give your baby? No, you're going to give them toys. But at a certain age, like I was like 10, 12 years old, I was still playing with like Hasbro Mattel toys. What 10 or 12-year-olds playing with Hasbro Mattel toys now? I don't think a lot of them. I think they're all playing, Fortnite, half of them are playing. So I went on a golf tournament last weekend. Kid in grade 5. So he's like, 10 years old, 11 years old? Plays Fortnite like 5 hours a day. And he's won some, this is what the kids do now. I was playing video games that age too, but I was also playing with toys. I mean, the kids love the games now. And that's why, the growth area is still in those games. But I just can't, get on board buying Hasbro up 11%, chasing it on guidance that, okay, yeah, sure, it beat the number, but the numbers were already brought down from where they were before. The numbers have been coming down for Hasbro. I mean, he's making 48 cents. So is that what it was? 48 cents on the bottom line. So $2, $3 bucks they're going to make on the year. You're going to buy Hasbro with a 25, 30 PE? Not for me. No, thank you.
I played video games. Pinball was the video games back when I had it. I love playing I
love video games too, but I also like playing with toys, and I just think the kids are moving away from it more. But maybe if you lose one of these toy providers, maybe there's always going to be a market for toys, and maybe Hasbro can reinvent themselves and figure it all out too. I mean, if I had to invest in a toy company, looks like Hasbro's doing a hell of a lot better than Mattel. But
doesn't Hasbro have the Disney affiliation too?
Helps, yes.
Yes, I think that. Yeah, it helps. I'll just say that there's some overhead supply here. We are at the highs of the pre-market session, which is 104.90. We had a big gap down day. I'm not sure what the reason was for that, but we are now well above that. We're filling that gap and some more. I would keep a high on 106.80 if, in fact, we can continue to rally. That was a daily high that you had. This was back in last year at 106.80. So that's what I would use it. The longer it took to get to 106.80, then I think I'd sell a little bit on weakness here. Have absolutely no idea where to go on this stock in today's session.
I'm out. I'm not. I don't know if I never know if it starts to leak here. I might actually try it on the short side. But again, we've seen the ball, the momentum goes into one name, and it sometimes continues. So you got.
What would define leak to you, Dennis? What would define leak to you?
Okay, so bring up the pre-market chart. We need to look at that. And this is why the pre-market charts are so important. So show me the pre-market chart. Bring it up.
I'm getting it up right now.
Okay, it's bringing it up. I mean, right now, it's been 105. It seems to be, some buyers that were trying to push it through 105. But there also seems to be somebody just willing to sell it. There's an iceberg over there. Now, trying to take, they took it out right as I'm talking. So, but it's still going up. I mean, from what I can see, there's no reason try to short a stock that's still going higher. You've taught me this, Joel. I've done it a lot of times where you try to stop a stock from going up. You're like, it's too high. This is going to be the top. Because I would say wait till you have a first red candle on the pre-market. Wait till you get a whoosh. Now you have a spot where, okay, there's a few people caught. So at least pre-market traders caught. So now, maybe you can try to initiate if you try to claw your way back to that level there again. But the stock is still going straight up in the pre-market. So why try to be a hero and call the top? I mean, we were, and some egg on our face from Honeywell because we were trying to call the top on Friday, and you saw how well that worked for us. We were looking at it 152.5, and I was like, it looks like there's going to be a seller there again. We'll try to call the top. What happened? So much volume, it just blew right through there like nothing. So ended up going up to 153 or 154. But I mean, it's difficult to just stop a stock from going higher. You want momentum on your side. So wait till you get a red candle. Look at this is where you can bring an intraday chart up and say, look, I'm thinking, this is now had a little whoosh at least intraday. Now you got a few people that, maybe just bought it here. Now they're looking for outs. Right now, the thing is still going straight up. So anybody who's bought a pre-market is feeling good about themselves. There's no pre-market traders that are under pressure. There's no, there's just nobody losing money here that's bought it at all yet. So that's why I like to see the first whoosh. It's the same way I look at the charts. I'm not looking for patterns. I'm not looking for anything. I'm looking for when the stock's going straight up. I look for that first whoosh. Now you got a few people caught. Now I have a spot where I can try to initiate a short. Maybe it takes out and starts making new highs. If I'm short a stock that's making new all-time highs, I cover. I don't want to be short stocks making new highs, especially on the move. So you look at that, and then you've got a spot. So wait at least until you get a first red candle, a significant whoosh where you see Hasbro go from 105 to 103 or from 108 to 106. Now, all of a sudden, now you have a spot where, okay, now I can come back up. It comes back up to 107, 107.50, then I can try to initiate the short. But trying to stop a stock or short a stock that's going straight up is a way to lose a lot of money.
And just using the pre-market levels, just going back to an example on Friday, Microsoft got the second bracket after its earnings came out, went to 109.30. And then settled in. Eventually, right before the market opened, we started to struggle at 108. And then, the high of the day, what did that end up being in Microsoft? It ended up being just over a nice round number, like 108. But, not necessarily hopping out in the pre-market, but just seeing what levels develop. Obviously, Microsoft is a lot thicker and a lot different stock. But, I mean, someone was, after they missed that 109 spike, yeah. Someone added out a lot of stock at 108, and the market couldn't absorb it and ended up selling off on the day. So there's just, like I said, this is a much heavier traded stock. But look for some levels. If I see 106.80 in this thing, I think if you bet, in this thing for a trade or long term, I mean, I think that might be one level, perhaps to take it off route or see how long it takes to get there.
It's a great example you're making, and just bring up the intraday chart from Friday of Microsoft. And yeah, we opened up. Where did we open on Friday? I'm trying to just grab the opening price here. I'll grab it. We opened up 108.08. We got up to 108.20, and then so you came back down quickly through that open, and we whooshed. We whooshed in the first, look at it, in the first 5 minutes. We went down to boom 106.70. What did we do after that? We kind of came back up, so it gave you a shot. So you had the 108. It whooshed down to 106. That's the initial whoosh I'm talking about. That's where you look, okay, now you had some sellers in here. Now when it comes back up, you got some people that are going to be willing to unload. So now in the next 5 minutes, it got back up to 107, 107.50. That's where you start initiating, leaning on that 108.20. And it starts making new highs. You're like, it didn't work. But, it's the same way Jeremy Newsom trades. We give Jeremy a lot of props lately, but he's been hot as hell over there at Real Life Trading. He usually does it on the other side. He's more of a long bias trader, but, he looks at these, charts. He looks at where, it comes down, and then it starts to pop. And then he's got a level. And then he's got, and he's very good at holding to, his rules. And he'll give his defined risk and defined return. He sets his risk limit right away. He sets his target right away, and he goes with it. And and that can work very well. So in this case, this would have been the setup where you open at 108, you whoosh down to 106. Now I'm going to set my stop at the high of the day, which is 108.20. If it takes up the high of the day, I'm going to say I'm wrong. But I'm shorting it from 107.5. Well, throughout the day, now you're down to 106.27. So you're over up a buck. You were risking yourself 50, 60 cents. Now you're finding yourself up $1.30. That's a good, nice little trade there. That's how you set it up. That's how you do it. Define your risk.
I talked to him over the weekend, and I also saw on his Twitter feed. You know what he caught on the long side on Friday? A stock that we talked a lot
what was
about. Skechers.
He did. And he made a huge trade on that. Because you know why? Skechers opened up, they're opened down significantly. Will open near the lows. And then he set himself up that, okay, if it starts going back down and making new lows through the open, I'm going to get out. Well, it didn't. It rallied $2 from there. So, when we were thinking, that it could follow through, we didn't know what it's going to do. But when the stock opens down near the lows, 24.11, whooshes down 23.80, and then starts coming back up through the open. When they start coming back up through that opening price quickly, that can be your buy sign right there. It's something you taught me back in 1999. That open is huge. So many people in from there. So see where it opens. If it starts to shake out, a few people comes back up through that price, that's your buying signal. That's where you jump in. Now you lean on the low of the day.
You also have an out. You have
the low of the day. Yeah, exactly.
Yep.
It's you're risking yourself 30, 40 cents. If it starts to take out the low of the day, it'd be some slippage. Maybe if it gets out down through, it could slip through 10 cents. So, just because he put a stop at 24 dollars doesn't mean it's going to get executed there. It could get executed 23.9, 23.80. So there's a little bit of slippage in some of these thinner stocks, but the slippage, if you're a small enough trader, it's not that bad. I mean, huge institutional trader, it's harder to do. I mean, you can't do this on $10 million worth of stock. But, that's the advantage of being a small little guy. You can easily do 100 grand worth of stock. You can work down Skechers probably fairly easily. So sit yourself set up and go with that. I mean, and if you're a smaller trader, you can work 10,000 worth of stock in almost anything. So that's the advantage of being small. Take those opportunities to wiggle in and out of these stocks because the liquidity is there for you. Lots of nice tangents here today. We're not. Well, let's go to the merger here. Let's go to some M&A, Spencer. Bring you back in here because we got a big merger here. I think it's official here now. LifePoint looks like they're getting acquired by Apollo.
It is official. LifePoint getting bought by Well, no, actually, I think it's
Apollo Global, APO.
Yeah, for $65 a share is the magic number.
So LPNT, this news broke on Friday night, and it started blasting off that there was rumors officially announced here today. So it's priced $64.05. You can see the risk arbs are giving a 95-cent discount from the takeout price. So that story is, obviously, I think this merger is going to probably go through. So that's kind of over. The sympathy plays, though, will be interesting because you got a lot of this hospital play. So if the hospital stocks will probably take off on this, or at least in the pre-market they are. You can look at a stock like THC, which actually they're in potentially selling part of their business there. Hasn't traded up yet, but it's bid up big time. So 35.11 is the close. There's a 35.85 bid here right now. Nobody's hitting that. So it looks like it could trade with the 36 handle here today. You got UHS, which is another one. It's up $1.83. You got HCA. It's not traded, but it's bid up significantly, 108.75. And then you got the small little $2 stock, CYH. It's trading up 5% here this morning as well. And this is all just because of the acquisition of LPNT.
Can I mention also, if you're looking for like peers, if you like, I don't know how Dennis found those peers right now, or maybe he just knew it off the top of his head. I always find peers by just going to quotes.benzinga.com. It's basically what Google Finance, before they got rid of Google Finance, used to have, was this really good feature where they would you go to ticker page and there would be related companies. And so we just kind of recreated that. And so if you go to quotes.benzinga.com, I just typed in LPNT, and here's a list.
I'm doing it right now.
Here's a list.
Do it live for us on the. Can you show us on the screen?
Yes, I can.
Do it live for us on the screen.
I'll do it right now. So yeah, quotes.benzinga.com, and it's got like 15 or 20 peers right here that you can just go off of. And so here I'll pull it up so you can all see.
And you can see all the ones I just actually was talking about there: HCA, DaVita, UHS. Yep. That's a nice tool.
So here,
just for the peers, because that stuff works.
I'll make it bigger.
I've been a pairs trader for years, and that stuff does work. And if you're quick enough, there's opportunities there. I mean, there's a lot of healthcare companies here, so you kind of got to know which one's the hospital stocks, which ones are the smaller ones. Is it going to drive up all of these? I don't know. I know the sectors very well. Just I traded stocks for 20 years, so stocks pop my head. Like immediately when I see that, I see Tenet Healthcare.
Right.
So I'm going to that one immediately. But you can see there's some great stocks and some that you might not think of on this list. Like I know all like 20 of them.
Exactly.
So it's a nice list.
I go here all the time just for this one thing.
Quotes.benzinga.com.
Quotes.benzinga.com, and just
a thing
that we built a few months ago. And so I just wanted to mention that because for people wondering how you got that list of peers so damn fast.
That's nice. I actually did pull it out of my head, but quotes.benzinga.com would have gave me all these other ones.
All right.
So I wouldn't have been able to pull off 15 out of my head. So that's a nice tool right there. I'll use that, Spencer. Thank you.
Right. You're
Tell Jason Rasnick. He knows what he's doing.
You're quite welcome. All right. What else have we yet to cover today?
Well, there's a few stocks.
Nothing that we talked about on the pre-market show.
That's not true.
What is this with Mondelez and the Ritz crackers? I made a joke about it already, though. But what is Ritz crackers getting recalled or something? There's something going on?
Yeah, but the recall, I think, I thought it was only in. Oh no, it's not only. It was including Puerto Rico and the Virgin Islands due to a possible salmonella.
So it's only in Puerto Rico?
No, it's not. It's not. It's including those. I thought it was only. It's including those.
Where is the recall on the
Northern Canada?
It's probably me, Southern Canada, because I tell you, both of my kids have had the scoots for like a week here now, off and on. Those guys eat Ritz crackers every day. I better check those Ritz crackers. Maybe that's the cause. I better. I have the odd Ritz cracker. Maybe I should stop eating those too.
Well, it's not really trading this morning, so it hasn't.
Anyway, so there's a recall. What is it? What's the problem with them? The Ritz crackers?
Salmonella.
Oh yeah, great. That's got to cause the poops, right?
Yeah.
I found the cause of my kids' poops because they love their Ritz crackers.
Take it away from them. If you're trading Mondelez here, I just want you to be aware, man, just a wall here at 43, several highs just under 43, and you've had great support just around 42 as well. So it's still in a range, and 42, 45 is right in the middle. So not much price action off that recall.
Let's go to Papa John's. Hunter wants to know about it. 169. There was rumors that Wendy's was going to buy them. That's not.
No way.
Stiefel downgrading this thing to sell this morning. So you're looking at the reason why it's trading down 2 points here. You can thank Stiefel. I'll tell you, man.
They've been moving it.
Stiefel moves stocks. Out of all, like you think of Stiefel, they're kind of second tier. When I see Stiefel upgrade or downgrade, they are influential. I don't know why, but they move stocks, man. They are influential. So when they downgrade to sell, people hit the panic button. So, and Stiefel here this morning, stocks trading down $2.50 here on this downgrade to sell. Did you see the note, Spencer? I didn't dig into the details. I don't know why they're telling people to sell. But
didn't dig into the details myself. They lowered their price target to $38.
Maybe Lobster's in the chat there. If you got the details, he's always reading all these notes. We got a pretty good chat there.
They lowered their price target from 50 to 38.
Whoa. And they did downgrade to sell, right?
Mm-hmm. Yep.
Yes.
Okay.
Yep.
Yeah. Also, a poison pill. Hunter's saying something with the poison pill.
Oh yeah, they're trying to get the John Schnatter out of there. So, but that's a courtroom nonsense or boardroom nonsense that we'll see.
I just see Domino's Pizza, and it's went up, and this pizza, which is a great ticker symbol, PZZA, PZZA, as we say in Canada, has not, and there's a reason for that. And a lot of people like to buy the laggards. I used to always be one that liked to buy laggards too. I don't do it as much now because it seems like the laggards just continue to lag. And maybe it's the type of market we're in, and maybe it's going to turn around here, but there's often a reason for it. The stock has just underperformed. I used to be a fan of Papa John's, but you know what? They had them in Canada. They were popping up all over the place. Popping up, a little bit of a pun, but and we had one right down the road from me, and it closed. It didn't make it. I actually liked the pizza. I thought it was pretty good pizza, but I don't know why it wasn't working in Canada. Anyways, Papa John's is not working well as Domino's. Bottom line.
The one thing.
Go ahead, Spencer.
Oh, I was just going to say, a lot of people passed around that Forbes article from last week. That Forbes has been all over the story, and they had an in-depth piece, sort of, a peek behind the curtain about the Papa John's tenure at the company and his behavior, and transgressions aside, and bad racist comments aside, it did give you a peek into how he runs the business. And who he hires as his second and third lieutenants, and who replaces him when he steps down as the CEO, and who he gives responsibilities to, and how hands-on or off he is. And it did not paint a picture of a competent CEO. It painted the picture of a very overbearing CEO who promotes his friends, and that's not it's not a great way to run it. I'm no Warren Buffett, but that's not a great way to run a business. So,
pre-market low 48.30. The low of the move has been 47.80. You got a $1.20 bounce off that pre-market low. So I'd keep an eye on that. See if we can get down and test that low. Down on a little bit of volume here, but very important to keep an eye on the low of the move, 47.80. In order to fill the gap, you need to get up to 51.01. And did you know that his name, I believe, is on the University of Louisville Stadium?
Not anymore. Not anymore. They're taking it down.
They already took it down?
They're going to, yeah. They've already said that.
Painted over it.
Wow.
Mm-hmm. So, what other ratings, Spencer, jumped out at you this morning? It was kind of quiet, but I did see a few.
I hadn't actually looked super closely at my ratings this
morning. Jump over there to the pro. Get those ratings out there.
Let's go see in the pro. What do I see? Duke Energy and Cleveland Cliffs catching an upgrade this morning at JP Morgan. Duke.
Wow, Cliff. Stop it, Cliff.
Stop it, Cliff. CLF upgraded to overweight.
This is on an upgrade? It's up 6% on an upgrade. It was following earnings, and now it's up another 6%? Wowzers.
Yeah, earnings on, what was that, Friday? Yeah.
So the earnings pop it, and it was a huge pop on earnings. And this props to, I don't remember what analyst was talking about this last week. Somebody talked about this and thought they could blow it away. They obviously did. I mean, the stock at least blew it away. Now you get up through $10 here. Now you're 10.30. Now you're right up 10.56. I mean, now it's like, this is a big move. I don't know. I guess the momentum's on your side here. So I guess you're riding until it stalls. But this is a big move.
Hasn't closed over $10 since October of 2014. Trading at the highs of the pre-market session at 1060. So you want to see some follow through. Maybe some size at 11. Like I said, big move on Friday. Moving up on some decent volume too. I mean, you've already got a big move, but just keep it at 1170 over the next few days. Over a long-term performance, this thing made its all-time high in June of 2008 at $121.95. So overall, not a good long-term performer. Keep an eye on that pre-market high.
What's the other one, Spencer?
Duke Energy, DUK.
Duke. What else? Anything else? Just go fly through them.
Yeah, there's not a ton this morning that caught my eye. We mentioned the Papa John's. I saw GE downgraded Argus to hold.
GE got downgraded?
Yeah, Argus.
Oh, really? I didn't see that one this morning. Anyways, follow through. Let's talk GE for a second because this was an absolutely terrible day for it. Its stock was trading up the entire pre-market session. Obviously, it was up over 14. It opened and collapsed. Just literally, like, it went down from 1375 to 13.25 in like 5 minutes. So the institutional sellers just said, nope, sold to you, and they killed it. Interesting enough, they did balance it. And, you were saying, You know, it's 13.25. It's probably going to 13. It did. Went all the way down to $13. Triggers a couple stops under 13 and then catches a rally. It's funny how they just cut through these whole numbers. That's where they bottom, and then they have a little bit of a pop. So, I mean, if you're buying it here now, you got to almost give it to the low of the 1261. Just got back to June if you're buying it for a swing trade. But the momentum is just not on your side here.
Yeah, not at all.
I continue to say that, you know, I sold this out of my investment portfolio after 17 years. That's how much I do not believe in the company. So for 17 years, I sat there with GE, believer. Maybe I'm selling the bottom. Well, I'm not, because I ended up selling at 17. But, I mean, maybe I was selling the bottom, I felt like at the time. Now it's 13. And I honestly think this could go to single digits. It's just such a mess. Maybe they can figure it out, but every single time they have an earnings or they have something, you know, some type of positive momentum going, the company kills it somehow. The company is just a mess. Is there value there? Yeah, there's value. But where is it? The debt is enormous. They're trying to figure it out. Maybe the CEO is going to figure it out. Maybe it's going to be a turnaround story eventually. But I see nothing in the technicals that tell me this turnaround is imminent.
Interesting fact here on GE. I mean, you had 3 closes right at the 1370 area. Opened up 1372, could only go 6 cents higher. Went down now for your bulls here. I was waiting for this to fill the gap that it had. I can't remember where they sold some units or something, and they had a gap at 1305. So let's make a low a couple days here, hold 13, and you have an out here at 1261 if you're trying to pick a bottom. But I like the fact that it filled the gap and closed back above 13. Now I want to see 2, 3, 4 other lows in that $13, 12.99, 13.05, etc. Perhaps for it to build a little base. Big people making big decisions. 75 million traded on Thursday. 171 million shares traded in GE on Friday.
What else you got?
Yeah. Not a ton in room ratings land. I mean, I'm just going through the calendar here. A couple of quiet periods.
The analysts have their weekends. They're with their families. It's a nice summer day, so they're not doing a lot of stuff. It always gets busier Tuesday.
There were a few.
They come back to work Monday morning. They pump out the report. They publish it Monday night or Tuesday morning.
There were a few quiet periods up today. Analyst quiet periods. BJ's got initiated by a bunch of people. Mostly, actually, everyone was either buy or neutral on BJ's. This was from the IPO from like a month ago. But nothing really besides that caught my eye this morning. So kind of a quiet morning for the analysts.
It's quiet morning and balanced land here too, not seeing much at all. AT&T 114,000 to buy. AT&T remains a complete dog. This is one. I have that small little piece of my invest portfolio. It's going to go the way of GE for me. I am going to sell this, I think, very soon here. I like the dividend. It's paid me a dividend for a lot of years, 6.42% here now. Again, my argument here, though, is I just don't know. I think competition is going to be coming for them, and there's so much debt there, too. So, anyways, I think this is a value trap. So, 6.42% dividend. Do you own AT&T, Joel?
No, but I've been looking at it since 37.
You know what? The dividend is nice. I mean, the 6.4%.
I know.
It's safe for a while. It's just a matter of, is competition coming for them and can they sustain it long term? I don't know. The 6.4% dividend is nice. Verizon, I don't get it at all. I don't get why it rallied up to over $51. I think it's a short. It looks a little broken on the chart here too. So as it pops back over 51, I'm a seller of Verizon. I sell short, not even a seller. I would sell the stock short. So in my opinion.
Real quick here before we wrap things up, Miami Option in the YouTube chats asking about Facebook. First thing you want to know is they report Q2 earnings after the close on July 25th. So that would be Wednesdays. Had a nice run into earnings. So the earnings, are always a coin flip or whatever, but it's had a great pre-earnings run. 211.50. That was your high on Friday. And your all-time, but it did not make an all-time closing high. So that's 209.99. I mean, if you've been in this one long term, you sit it through the earnings. If you've just played it short term and you've caught, it did okay. It just kind of hung out last week. But 211.50 could be a target on the upside here in Facebook. And Good, or I'd say decent support at your 2-day low of 207.76.
I thought I saw a price target. Was there a price target raised on Facebook today? I thought I saw something fly by. See anything, Spencer? No, I didn't see an upgrade.
I don't see anything.
I thought I saw something go by. Anyways, there's a reason it's up another buck. So this fits the bill, though, on my ETF argument from before. I like the Facebook valuation a hell of a lot better than I do a Tesla or Netflix. But again, this is just a stock that's very loved. It's a stock that's put into every new growth ETF there. I don't see any reason for that not to continue. So hard to be shorting Facebook.
Hey, Joel. Oh, no. Sorry, keep going.
No, I just saw someone, astronomy fan, mentioned TLRY, and that's a new IPO. It's only had 2 days of trading, and so it's very hard. I mean,
what's this do? I don't even know what it does. Tilray.
Tilray.
Spencer, you know?
I don't know. I'm looking it up.
I have to find out what it does.
It's our company.
I don't know what it does.
A vertically integrated. This is from their own website. A vertically integrated federally licensed cannabis cultivator. Cannabis.
Oh, this was the cannabis
pot stock. It looks like.
Okay. All right.
Yeah. Pot stock.
Just keep an eye on. I mean, we are trading above yesterday's high or Friday's high, which is the all-time high 31.80. We're trading 32.18. You got a pre-market print at 33.90 if you get up there. I guess the most important number for me, as long as it stays above 29.77, that was your close from Friday. Looks good here. Decent stock trading in that IPO. Spence, you want to wrap things up in a preview Tuesday show?
I want to ask you, Joel, is David Seaberg joining us tomorrow?
I have not got an email from him yet, so right. I will reach out to him again. He said he was going to email me first thing this morning.
All right. Well, I hope he does, because we have a line out to David Seaberg. You've probably seen him on Fast Money. He's the head of sales trading at Cowen & Company. He may join us tomorrow. Nick is on vacation, so no Nick, but that's going to be it for today's show. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just rewatch the show on YouTube. Thanks to everyone in our chats today on YouTube and premarket.benzinga.com. Hope you all have a good rest of your morning, and we'll see you folks on Tuesday.